In this video, we are going to give you the truth about home loans and unveil the secret weapon that could literally make or break your dream home. Welcome to the channel, Market Randazzo. This is everything you need to know about living here in Denver. I'm a realtor with 8Z Real Estate, and today I am joined by my friend and lending partner, Allie Williams. How are you?
Good. Thanks
Awesome.
for having me.
Yes, thanks for being here. So really quick, my goal is to be like the most helpful realtor in Denver. And can you talk about your goal as a lender here?
Sure. Yeah. So my goal is to be a resource for Marco, for all of his clients, and to just really stress how simple the process can be for clients and provide clarity.
All right. So if you're considering a move to Denver, or if you already live here and you're considering a move within Denver, it is extremely critical in 2024 that you have a full clarity of all your options. There's a lot of moving parts around buying a house and getting a loan. And only when you have full clarity around everything are you able to be confident in your decisions, so that when the right home comes up, the dream home for you and your family, you're going to know what your options are and you'll be confident you're making the right choice for your family, right?
Right.
Sweet. All right, so we are going to talk about the secret weapon that was mentioned at the beginning of this video. This is a game changer for our clients, okay? This is not some woo-woo, juju, whatever thing in the clouds. This is like a real tool that if you don't have it in your tool belt, you might be hosed. I mean, that's the truth. That's for real. So Allie, tell us about our cash buyer program and why it is awesome.
Yeah. So I'll start with why it's awesome. I actually saw a statistic this morning that in January, 30% of closings were cash buyers. So that's huge. And in the past, that would push first-time home buyers out. It would push a lot of home buyers out. So we are lucky enough to have an in-house cash offer program. If you are working with Marco, you are going to be eligible for this. And we are literally making cash offers for our clients.
Yeah. So the way that works is you get approved with Allie for a loan. And if you're approved for our cash buyer program, you have the option when you find a house to deploy a regular offer with a loan or to make it a cash offer. And it costs 1% to use it, basically using our money that we have in the bank. And we can close in 2 weeks, sometimes a little less than 2 weeks. Yep. Skip all the loan contingencies, appraisal contingencies, and make your offer look awesome. Anything else you'd add to that?
I mean, I think, coming from a lender, as much as I hate to admit it, cash offers go to the top of the list. So I think it's just a huge way to get our clients, up in the top 5, hopefully top 1 or 2 in the eyes of a listing agent or a seller.
Yeah, exactly. And that's a multiple offer situation you're describing, which we've kind of been in and out of over the last couple of years. 2024, they're already coming back.
We're back.
Yeah.
Yep.
Last weekend, one of our clients was up against a dozen offers, right? This is a very real thing, even with the interest rate environment being where it is.
Absolutely.
So the whole point is you as a buyer should be equipped with cash offer in your tool belt, so you have the option to deploy it. If we have a client who sees a house and it's been on the market for 3 weeks, they probably don't need it, right?
Not always. To be honest, maybe not. Maybe it's not the best option for them, but I do think it would help their terms.
Yeah. And so it's like we've pitched this as an A/B option for clients all the time. Sometimes they want to use it to leverage their negotiating power a little bit more, right?
Exactly.
And sometimes they don't, and they want to just go with a regular loan offer. And sometimes it depends on the listing, right? If it's a seller who is an investor, they might not care as much if it's cash offer or loan offer. If it's someone who's lived in the house for 50 years and really doesn't understand how these, cash offer programs might work. And, as an agent, if I'm feeling that out for my clients, we might decide it's best for them to just go with a loan offer.
Yep.
But ultimately the goal is they can be able to choose if they know their options.
Yep.
Right? So.
Yeah. And I think that's the most important thing. It's just giving them the option. So whether they are approved for the cash offer program or not, they don't have to use it.
Yeah, exactly. And this is the thing. I call it a secret weapon because literally most people don't even know it exists.
Yep.
Every time I explain it, people are like, what the hell is that? Right?
And it's so easy to get approved for. Honestly, most clients don't notice the difference between a standard pre-approval that we would do for any traditional offer or the cash offer approval, which we call getting pre-funded. But for clients, it's the same process.
Yeah.
It costs nothing.
Yeah, exactly. So we're going to pause on this after this quick story and come back to this later in the video. So stick around. You're going to want to hear more details around how this program works. But quickly, I'll tell you, this is a story of the one that got away. I hear this story all the time. I host open houses every weekend for my listings and for other 8Zers listings. And when people come in and they've got that like distressed look on their face, and they're like, you've seen the look.
Oh, yeah.
It's like, how's it going? They're like, how's your home shopping process going? And whenever they're like, well, we're still here, we're still shopping, I hear the story of the one that got away. And I always stop myself from singing the Katy Perry song in my head. And they tell me about getting beat out by a cash offer.
Yeah.
And often they're in there, they've got their kid in the carrier. And I have a flashback to when Lizzie and I were shopping for this house. Jesse's 3 months old. We're shopping and it's like so stressful. You're like, where's my family going to end up? And people say, I got beat by a cash offer. And they, in their minds, they're like, I had no shot at all. And I'm thinking like,
but you did.
maybe it was me and Allie and our client who was getting a loan who crushed them because they were approved for our cash buyer program. Like, this is why I call it a game changer, is because it is literally the make or break when you're in a multiple offer situation. Very often it's the thing that gets people across the finish line. So now we are going to answer the top 4 questions that people ask around the world of lending and give you a couple of brief answers to those. So Allie, thanks again for being here, because you're able to answer these questions much better than me. I know enough to be dangerous, but the world of lending is your department. And if you hear my 1-year-old screaming up above, it's because she's beautiful and just turned 1 and she's learning to use her voice. And she's so beautiful. All right. So Allie, what type of mortgage is best for me? That's a question I get all the time.
So it depends. I mean, that is the main point of my job. So there are so many different loan options, loan products, loan programs out there, from first-time homebuyers to experienced investors. Not everyone is going to benefit from the same loan product. So what type of mortgage is best? It really depends on your situation. The easiest and fastest way to figure that out and provide clarity is to start the pre-approval process. And then I will dial in through all of these options that we have available to us and determine which one really makes the most sense for you. The most common loan products, different types of mortgages that you hear. So conventional. This is a very vanilla, straightforward 30-year fixed generally loan that is for first-time home buyers, repeat buyers. Most of the loans we're doing are conventional loans. We also have FHA loans, another amazing option. With FHA, the minimum down payment requirement is 3.5%. That is what a lot of clients look to. Conventional loans, actually, a lot of people don't know this, but the minimum down payment requirement is only 3%. So
3%.
Less than FHA.
3%.
We also have jumbo loan options. This is a whole other arena. So this is when your loan amount, and we'll talk more about this later, but this is when your loan amount exceeds $760,000 to $800,000. So once your loan amount exceeds that amount, we're going to look into jumbo financing. At Collective Mortgage with 8Z Real Estate, we have access to all of these loan programs, loan products. We have VA, so many. And I mean, there's honestly almost too many to mention. But again, that's my job. That is what I would narrow down for the clients.
Great.
Yeah.
And like she said, most people are going to fit into that conventional or FHA bucket or VA. Thank you for your service. One of my friends texted me yesterday and he was like, my girlfriend's going to buy a house with me and she's got the VA loan option. It was like, sweet.
Nothing better than a VA loan.
Yes, they deserve it. So next most common question is not very fun. And that is, where are interest rates at?
Well,
moving target.
I would say ballpark 7%. That's generally what I give to clients. If I don't know their credit score, I have no idea what their price point is. Just off the top of my head, I'm going to say rates are around 7%.
Yep. And I tell this to every client. If you go on the internet and you go to any big box lender somewhere else in the country, you can probably find rates that are lower, but they're not a local lender. They typically can't close as fast, and it very often will be a factor that breaks the deal.
Yeah. And not to get into the weeds too much, but any lender can give you any rate on any day. So some lenders might say, our rate's 5.5%. Our rate can also be 5.5%. What the lender might not be telling you is that it costs $20,000 to get the rate down to 5%.
Points. Buying it
Points.
down with points.
Points. Yep.
If you ever seen rate sheets, I see these every day and sometimes they even confuse me, right?
It's hard. Yeah. It's hard to compare apples to apples.
Yeah. Our point is rates, even though they fluctuate a lot, you really want to know that your lender is giving you a straight answer about what the rate is for you. So again, I can give you a ballpark, but you need to get approved with your credit. They know your income. They know the scope of your situation, so they can give you a good estimate of what your interest rate is. And it doesn't really matter what the rate is, but it matters what your monthly payments are.
Exactly.
That's what most people care about. And we can give you better insight once you apply for the loan.
Yep. Yeah. So my first question to clients is usually, what monthly payment are you comfortable with? What's ideal for you and your family? And then we back into it. One other thing to mention, which lenders probably don't want you to know, is that from lender to lender, if you're shopping, the interest rates are probably going to vary by 1/8 to 1/4%, which a lot of times is only, not to minimize it, but maybe $30 to $40 a month. So that's the difference between one lender to another when you really boil it down. So, most important thing is to work with someone that you are comfortable with and that your agent is comfortable with.
Love it. That's great. And if you're in a situation where you're not competing, you might be able to get a credit from the seller to buy down your interest rate permanently or temporarily.
Yes.
We've done that a lot. The last year, 2023, we did a lot of those. 2024, it's less likely as we get into it when things are competitive.
I would agree.
But it really all depends. Even in 2021 and some of the hottest times of the market, we had buyers getting credits to buy down their interest rate even further when the home was overpriced and sat on the market for a while.
Yeah, absolutely.
And even now in 2024, you might find a house that's overpriced that sit on the market for 2-3 weeks that you can get a credit to buy down your interest rate to make your monthly payment more affordable. So it really all depends on the house.
Exactly.
Cool. I want to ask you this also about interest rates of where do we see them going? I know this is a moving target.
Yes,
the Fed says 6 times, then they say 3 times. And it's like the rates are all over the place.
They are.
Right? So what do you see happening in 2024?
They are. They've actually even increased since we've been into 2024.
Cool.
Awesome. Yeah. It makes our life really fun. But honestly, I think everyone would agree that we will see rates come down this year, but probably not until the second half of the year.
Cool.
I think that's the safest answer.
Okay, fair enough. Right. I play Dungeons and Dragons. I wish I had a real see the future spell.
Yes.
There's a couple of different spells that allow you to ask the DM a question in the future and get a real answer.
I wish.
That would be cool.
So
Let me know if you come up with that.
Quick plug.
Yeah.
Clients who are closing with EC Real Estate and Collective Mortgage, if they close by June 30th of this year, they are actually eligible for a refinance without any lender fees. So we will pay for the appraisal. We will pay for the underwriting fees. No lender fees at all for our clients that close by July 1st.
And that's if you refinance anytime in the next
3 years.
3 years. So don't let the high rates keep you from buying the house because you can always refinance.
Yep.
You do need to be able to afford the house at that higher payment in case they don't drop for a while.
Absolutely.
But just know that that is an option for you with Allie. All right, last question, which is one of the top questions I get, is how do I avoid hurting my credit? So this is a question that comes from people who are like, I think I'm going to buy in the next 3 to 6 months. They're trying to get the lay of the land. This question comes up for me a lot in buyer consultations with relocation clients or clients who are just 6 months out. And they're like, yeah, I'm going to wait to get approved, which a lot of people wait till it's too late.
To hear.
Yeah, we hear it all the time. Right? It's just better to get approved earlier, not for the sake of you buying a house earlier. We're never going to try to pressure people to buy a house sooner or for more money because it really doesn't move the needle on our business or our lives. What does move the needle on our business and our lives is being so helpful and transparent to make everything clear for people that they trust us and we earn their referrals over time. Back to my question.
Yes.
How do I avoid hurting my credit? I don't want to have it pulled too many times. What's the deal?
So generally, if you are having your credit pulled because you are getting pre-approved for a mortgage, and maybe you are working with multiple lenders at the start, you're still shopping, kind of figuring out who you're going to work with. Generally, if you are having your credit pulled by multiple lenders, it is not necessarily going to hurt your credit. Where it's going to hurt you is if you have multiple credit pulls for different reasons. So you are obviously shopping for mortgage rates. Maybe you are also shopping for auto loans, student loans, credit cards. When the credit bureaus see that you're just out there looking for new debt, that's where it's going to hurt you. But if you get your credit pulled by me, by a loan officer at Chase or Wells Fargo, the bureaus can see that it's a mortgage inquiry, and that is not necessarily going to hurt you. What I would also say, or reiterate what you said, is that it's never too early to start the pre-approval process. I know that's easy for me to say, but one, we can start with a soft pull, which does not count as an inquiry. So even if you are hypersensitive, you're really worried your credit score is going to go down by having a lender pull it, we can start with a soft pull. That eliminates that. Once we do a credit pull, that report is active for 4 months. So we're not going to have to re-pull it every month. But just like Marco said, the earlier you start your pre-approval, the more clarity you're going to have, the more time it gives us to dial in your ideal monthly payment, the more time it gives us if maybe your credit scores aren't as high as you would like them to be. We have access to a credit tool that shows us predictions. You know, if you pay your Chase card down to this amount, what will happen to your credit score? If we are doing the pre-approval the same day you're making an offer, we're just not going to have time to do that. But if you're doing this, you know, a month, 3 months, 6 months ahead of time, gives us all the time in the world to provide more and more clarity.
That is great advice. And I'm always shocked at the people that treat this like it's like a whatever thing.
Yeah, it's
Like,
a big deal.
it happens more often than I would like to admit, that like people, they call me and they're like, we found the house. It's like, great. We should have had our buyer consultation 2 months ago and gotten you approved months ago, so you understood the interest rate environment and your options with getting a buy down or how to be competitive, because the offers are due tonight at 7 p.m.
Yeah.
How the hell are you supposed to make a good decision? Now that's come up and I've helped guide people through the process, and sometimes they're on board, but it's very common where, like you said, there's just not enough time to get your stuff together.
Yeah.
And this is a BFD. You're buying a house. Your first house, your second, your third house. You're spending a lot of money. My point is, like Ali said, get started sooner so that we can help give you the full scope of your options as you go. And then by the time that right house shows up, whether that's 9 months away or whatever it is, you're going to know exactly what you're doing. And that is the goal of ours, that our clients have full clarity on the process so they really have control of everything. Yep. Cool. All right, let's do a brief explanation for those of you who are first-time home buyers. And that's not what we're going to talk about too much in this video. Mm-hmm. But let's give like an elevator pitch if someone has never gone through the process of buying a home.
Sure.
From the first time they call you to when they close, what's like the milestones along the process?
Sure. So, first step is a call or a meeting. Very intro, high level. Again, asking clients, what is your ideal monthly payment? What are you paying in rent right now? What's comfortable for you and your family? What is important to you? What does your timeline look like? And then we follow up with a loan application. Honestly, probably takes 5 or 10 minutes. And for first-time homebuyers, they don't own rental properties because they've never bought before. So generally, they don't have, a real estate portfolio that we have to dive into. So it's very simple. They submit their loan application. Again, 5 or 10 minutes. Usually, the only documentation we'll need is a W-2, 2 pay stubs, and a bank statement. And that's as easy as it is. Once a client submits their application, I usually set the expectation that I will get back to them in a couple of business days. But as we know, it can happen within hours or minutes. So if someone really finds their dream home and we need to get it done quickly, we can. It can happen the same day. But generally, start with the intro, loan application, documents, and then you're off to the races. It gives us time to kind of start the conversation of where you want your monthly payment. And then I hand it back to Marco, and he's able to set up those search parameters accordingly.
Yeah. And then we dive into the house hunt depending on their timeline. Very often that call from Ali to me changes what was in the buyer's head initially when we first talked. Sometimes they're like, hey, this is great. I can change the parameters higher. These days, with the interest rates where they are, very often it's, oh, instead of shopping at 900, I need to be shopping at 800. in order to keep the monthly payment where they need to be, or something like
Yeah,
that.
exactly.
And then for that kind of situation, we can look and say, okay, if it's competitive, if you need to go above list price, we really need to be shopping for those homes at 750. Or if you find that home that you absolutely love and it's been on the market for a month and it's at 850, here's the kind of credit we need from the seller to get the payment down to where you talked about with Allie makes sense for you.
Or we need to make a cash offer.
Exactly.
Yes.
These are the kind of conversations that Allie and I have with our clients all the time. And again, there's a lot of moving parts to this. So that's why we recommend getting started early. Make sure you're working with a realtor and a lender that are local, that are being transparent, that you trust. Now, let's move on from the first-time home buyer process.
Yep.
Let's talk about the second-time home
Sure.
buyer. So as you know, you helped me with this a couple years ago. Lizzie and I kept our first place and turned it to an Airbnb and bought this place, our dream home. So give us generally what a buyer needs to be thinking about if they want the option to keep their first house as a rental,
Yep.
short-term or long-term, depending on where you are and what your options are. And they want to get into their dream home or their second home, whether they need more space, they've had kids, whatever it is.
Yeah. So, again, we will go over the client's goals. What's important to them? Is it to hold on to their current home long-term, maybe short-term? Maybe they want to rent it out for a couple years and then sell it. These are all things that will kind of guide us in the right direction on the structure of their new loan, on their new purchase. But as far as qualification goes, if a client does want to keep their current home as a rental, usually what we will do, if we need the qualifying income, we will get a lease, a 12-month signed lease on the departing residence, and we can use that to offset that mortgage payment in their debt to income ratio. So essentially, it's not hurting their qualification on the new house. Sometimes it doesn't matter. Maybe the client qualifies with the old mortgage payment and the new one. In that case, we just won't even bother with a lease, just less documentation for the client. But it's important to know that they can use that potential rental income on their departing residence to help them with their new purchase.
So like Ali said, you might even not need the qualification from a lease. And that's going to be the case when you just have a higher income and more money saved.
Yes.
So if you're ever not sure what you're going to be doing in the future, just keep saving and keep your income going up. You'll have the most options in the future.
Absolutely.
I will happily sell your house and I will do a kick-ass job. But here's the thing. Very often it's the right thing for the client to keep the house as a rental. That is where I really love being a helpful asset to, along with Ali's help with running the numbers, and we can help you A/B test this thing and look at things ahead of time. If we sell, we're looking at this as a net profit that we can expect, that we can put into our next house. If we keep it, this is what we're expecting as a rental. And then this is what our mortgage payment is going to be. There's a lot of moving parts to this.
Absolutely.
So you've really got to have a full scope of your options and the numbers. And I know, like I said, I know enough to be dangerous, but that's really Ali's department to help guide you through all of the lending side of this too, so you know your options are.
Our goal is for our clients to build wealth in whatever way, makes more sense to them. Some clients could hold on to their departing residence. They could keep, a full portfolio of rental properties, but maybe they don't want to, and that's not important to them. So our goal is to figure out what long-term goals our clients have and, do everything we can to help them build wealth.
Oh, you said that so well. That's great. So let's say you're buying your second home around the $1 million price point and you're going to keep your first one as a rental. When you're looking at buying that next one, the conforming loan limit has recently changed a lot, which gives you more options. And Ali's going to talk about how that affects you.
Perfect. So in Marco's example, you are ready to buy your second property. Maybe you're holding on to your departing residence as a rental and you're looking in the $1 million range. How much do you need to put down? The great news with the recent loan limit increases is that across the country, the conforming loan limit is $766,000. It's actually $766,550. And this is, again, across the nation. This is the conforming limit. That means that as long as your loan amount, not your purchase price, but your loan amount stays under $766,000, we are going to be most likely using a conventional loan. Very vanilla, straightforward. Your down payment, you can put 20% down, or you can put as little as 5% down. So, given that the limit is around $766,000, you can go into the $800,000 range and only put 5% down. And that's huge for first-time home buyers or second-time buyers.
It's a big deal too, because it has gone up significantly.
Yeah.
I forget the numbers. 2 big significant increases recently
Huge.
before that.
Yes. And in some counties in Colorado, Denver County, for example, we can even push that limit to 816,000 sometimes. You want to talk to your lender to see if that makes sense or not. Again, what benefits you specifically. But 766, you can get up to 800,000 with only 5% down. If you have 20% available, that pushes your price point up to, $960,000, almost $1 million. It's huge. And again, you're not dealing with any jumbo financing guidelines. I do want to say there's nothing wrong with jumbo financing. I consider myself an expert in jumbo. They don't scare me. They shouldn't scare you. They shouldn't scare listing agents, but they just do get a little more involved. So if you are keeping your loan amount in the conforming range, the process is just so smooth and easy for everyone involved. One thing I want to mention is that if you are looking at a duplex, the conforming loan limit goes up basically to $1 million. So you can have $1 million loan and it's still conforming. It's not jumbo. That means you only have to put 5% down. And on a duplex, you can also use the income from the second unit to offset your debt to income ratio. So just lots of things to consider. And again, that's my job. I will take care of that. But it just really opens up possibilities for buyers.
All right. So now let's say you don't happen to qualify to keep your departing residence. Whether you want to or not, if it's more important to you to get into the bigger next house and you have to sell in order to access your equity, then you just have to sell. So what are your options? You can sell the house first, ask for a rent back to give yourself some time while you go out shopping. That whole process is going to be stressful, I'll just tell you, but I have had clients who do it, right? Yep. We created a program, the 8Z Cash Buyer team, called 8Z Bridge, that literally helps you buy before you sell. This program, again, it's a game changer. It's one of the secret weapons that we have that can help give you options. And I'll let Ali explain how 8Z Bridge works.
Sure. So as Marco said, you are able to buy before you sell. You are able to make non-contingent cash offers. So that's the important thing too. With this program, you're not just making offers before you sell, you're making cash offers. And what happens is our cash team will actually secure the property for you. So you will go shopping with Marco. You will identify your dream home. You and Marco would identify all of the terms in your contract. So the purchase price, closing dates, inspection deadlines, that is all up to you. You are in control. But the nice thing is that on the contract, the buyer is actually our cash offer team. And they truly are closing in cash in 2 weeks or less. So sellers love to see this. And just high level, how the process works, cash offer team buys the house. They secure it for you. As soon as they close, you can move in. That allows you and Marco to start staging your departing residence. So you're not having to list your home while you live there,
Such
while
a
your
pain.
dogs and kids are living there.
Huge pain in the ass.
Yep. So you can move in right away. And then once you have sold your departing residence, you can use the proceeds for down payment on the new house. And that's where we would work together. So we work off of something called the buyback contract, where now you are the buyer, our cash offer team is the seller, and we work towards closing just like we normally would. But it's a very simple process. We've done it a ton. It goes very smoothly for our clients. Again, clarity is key here. So we'll go through the process multiple times before you're even making offers. But that's how it works. We will secure the property for you, give you time to sell your departing residence, use those funds for the closing on the new house.
Awesome. Yeah, so that's a high level view of Bridge. There are a lot of moving parts and details to this, which we're happy to go over in more detail. If you want more information, you can reach out to us anytime. I'm going to have both of our information linked in the notes of this video. The cost for Bridge is 1.9% of the house you're buying. So if you're buying a house for $1 million, it's costing you $19,000 to use it. So cash buyer, if you're not selling, but you're just using cash buyer, costs 1%.
Yes.
So if you're just buying the house, but keeping yours as a rental, if you're using cash buyer, it would cost $10,000 in that example. So basically the option is yours, is do you want to pay extra money to give yourself an edge? And when there's multiple offers, our clients very often choose to give themselves the edge. And when they win, literally every time it's the agent calling and saying, hey, you went to the top of the list. My seller chose your offer because it was a cash offer.
Yeah.
Even if it was sometimes not even the highest offer. And then when we call our clients, it's like, you got the house, they're screaming, they're happy, they're crying. Their kids are maybe crying because they're little. But like, this is a big deal. This is why I say it's a game changer for people, because that house is no longer going to be the one that got away for you. It's going to be the story that the other people tell when they're out shopping again. And they're like, oh, we got beat by a cash offer. And they didn't know it was a freaking option for them. Last story about cash offer. The most offers that we beat out was 25. 25. Do you remember that one?
I do.
Jeez, that was insane.
It was insane. And the clients honestly were hesitant to use the program.
Super.
Because it was going to cost them 1%. And I will be honest, I didn't look at the numbers. I would imagine it saved them way more than 1%.
Yeah. Because if they lost that one, the houses were just going up in price in the neighborhood.
Yeah.
It would have just cost them more the next time. But they were able to secure that house. They got in, they beat out all the other offers. And realistically, like, because this ended up going like 75 grand over the list price. It was in Park Hill. It was like a cream puff.
Yes.
But realistically, there was like 5 offers that were contending at the top. The listing agent called back, asked if people wanted to resubmit, change their offers. We changed ours up a little bit. And ultimately, we were neck and neck with one other buyer. These are the bidding wars that people hear about. But in this case, it really was just like making the offer and then choosing to change it once and then waiting to see. And they said ours was literally exactly the same in price, terms as the other offer, but the other one was contingent upon getting a loan.
Yeah.
That's the ball game. So we strongly advise that you get approved for this, just so you know it's an option in your tool belt. I've said that like 5 times in this video, but it's true. Most people don't even know this thing exists. Right. So if you know it's an option, you get to decide, do I make a regular offer or do I make a cash offer? But it sucks when someone else gets to make that decision and might get the dream home and crush your dreams. That sucks.
I'd also agree. I think it always makes sense to get approved for the cash offer program. You don't have to use it. If you find yourself in a situation that maybe isn't that competitive, that's okay. You don't have to use it, but it costs you nothing to get approved for it. You will hardly notice the difference in the approval process. That's all done on my end.
Sweet. And I guess we can stay here for a minute, because this is a program we have in-house. Like, I, as your realtor, Allie, as your lender, 8C offers, like, we even have our own title company. We have everything in-house. We're working together. The process is so smooth. There are other programs out there kind of like this, like Orchard. Everyone gets like things in the mail from Orchard. I'll buy your home in cash. They have like a bridge program. It's pretty confusing. You're not going to get nearly the same level of service. There are some other brokers that are starting to come up with these programs and implement them over time, but they're playing catch up, right? So some people have heard of these, but there's most brokerages and most lenders don't have this as an option. It's cool that 8Z Offers has a bank account with First Bank, local. I think they always keep $10 million in the bank.
Yep.
And that's just an asset that I can reach out when my clients want to use it and use it. It makes me look like a rock star.
Yes.
It's freaking sweet. So this program, we have it in-house. It's very smooth and it's incredible.
Yeah. Having full control over the cash offer process is huge. It wasn't always the case. We actually started this a long time ago with a cash offer team that wasn't in-house. But now, we know the owner. We can go to the top. We have full access. It's a game changer.
Awesome. That was a lot, but it gives you an overview of the secret weapon for cash buyer and bridge, some of the top questions around lending, and hopefully demystifies the entire world and process of lending so that you know more about your options. Allie, is there anything else we missed or any final advice that you want to talk about?
I would say I just wanted to really bring it home to get pre-approved early. Or maybe you are not ready to get pre-approved, but you're considering it in the next couple of years. I would say keep everything in your life as stable and consistent as you can. And what I mean by that mostly is your employment. So it always makes the pre-approval process a little bit easier on clients when they have a steady employment history. So keep your income up, keep it stable, work on your credit. I always give clients the advice of keeping your credit card balances at 30% or less of their limit. That's going to put you in the best situation for credit scores. And assets, obviously, the more funds you have available, the stronger offer you're going to be able to make, whether it's a cash offer or not. Yeah, just to recap, I would really stress that it is so important to get pre-approved early. The main things we are going to be looking at in your pre-approval are your credit, your assets, and your income. More important than your income is even your employment history. So if you are considering buying a new house, maybe not the time to switch jobs, especially if you are self-employed, 100% commission. So I would just keep in mind, try to keep your income and your employment steady. Keep your credit card balances down as much as you can. Rule of thumb, 30% or less of your limit is going to put you in a great position when it's time for you to get pre-approved. And work with an agent and a lender that you trust. And work with an agent and a lender that work well together, because it's going to take a lot off of your plate.
Awesome. Along with keeping your income stable, you might want to try to keep your relationships stable also.
Yes, that helps.
Because you might need someone to co-sign with you. So never a bad idea to keep that girlfriend or boyfriend in case you need them to buy the house. I mean, we're joking, but very often we look at like, okay, can you get approved by yourself? Do you need someone else to be approved? Are you buying this house together? How are you taking title? This is the world of conversations that we have. So not saying you should keep the boyfriend or girlfriend if you need them to buy the house, but that's your choice. All right. So you can reach out to me anytime with questions. My information is linked in the show notes. My email is there. My cell phone number is there. If you prefer text, you can reach out to me anytime. I will respond to you in the same business day if it's between 9 and 5. I'm also going to link Allie's information. So if you want to shoot her questions via email or give her a call, you can go ahead and do that. And she can set you up with getting pre-approved. Ultimately, if you just want to know what your options are, your next step is a buyer consultation with me. If you live here in Denver, we can do this in my office. It's in Rhino. It's right across the street from Barcelona Wine Company. Or if you prefer a Zoom call, we can do it in my studio, just like this. It takes about an hour, and we'll answer all of your questions and give you clarity moving forward.
All right, well, thank you for watching. If you found this video helpful, please like this video and subscribe to the channel. I really do appreciate the support. Reach out to me anytime, and I'm happy to help you get all of your options clearly on the table so that we can help you get into your dream home.